please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
U.S. Treasury yields took a bit of a tumble overnight as news emerged that President Trump just may be leaning toward picking Jerome Powell to succeed Janet Yellen as chief of the Fed. Let's bring in Sri, my partner, for more on this issue. Sri, I've kind of learned with President Trump that he's not the kind of guy that likes to confirm speculation. I mean, not going to believe anything until it's a done deal.
It's important to bear that in mind, Bernie, and I think it's equally important to stress that point that you made, that all these Fed appointments are presidential appointments from the vice chair to the chair. So arguably, if you draw that to its logical conclusion, then if President Trump wants a hawkish policy at the Fed, he could have it by appointing the right person. If he wants a dovish policy, which he seems to be leaning towards, and remember he is a leverage and a debt guy, then he can engineer that himself. So that's the background here, and I think what's important now is that the currency markets, the dollar, fixed income, as you mentioned as well, is now starting to respond to potential changes within the cast and crew at the Feds, and it seems to be coming to decision time. There is no hard and fast deadline, as I understand it, in terms of appointing the Fed chair, but all candidates, as I understand, have reportedly met the president, so it seems to be coming down to crunch time. So let's talk about Jerome Powell now, and he's seen, and I think this is important, he's seen as the continuity candidate, he's an insider, he's seen as the compromise candidate, and he looks as though he can be the guy who perhaps can bridge this gulf and this division between the doves and the hawks on the Fed. But importantly, he is seen as being dovish on policy, meaning that he favours rates being lower for longer. So that pretty much, Bernie, is right up the president's street, especially if he wants to engineer a weaker dollar.
Isn't it kind of, I don't know, Sri, isn't it kind of splitting hairs at this point? Because you know, the market has well absorbed the rate increases to date. It certainly has absorbed the prospect of another hike before the end of the year, and then multiple hikes between now and the middle of 2019 without batting an eyelid. It seems at this point that the difference, you know, that the ideological difference between the doves and the hawks might be a lot narrower than the market wants to believe.
Right. I think it comes down to the pace of tightening. And 2018, as I keep stressing, there are a number of different moving parts here that the Fed has to digest. Not only the changes at the top in the chair and the vice chair position, but the composition of the FOMC. That could very well tilt the dove-hawk balance. And what those leaders believe and what those policy makers believe is the right point in terms of inflation and inflationary expectations, in which you start to really shift policy up a gear, and the normalization process. There's that to contend with. There's this entire issue about inflation and whether it really is the metric to guide monetary policy. And then, of course, it's back to the president. It's back to the tax reform issue and tax cuts. If they do come, if it is mid-2018, Bernie, that really has huge inflation implications, and of course, in association, it has implications for monetary policy. I wouldn't like to be in the Fed's shoes right now, quite frankly.
Yeah, no, it's, boy, it's like, yeah, the ultra-sensitive markets, you know, a little bit of a move or a little bit of a scoot in this direction on policy, and wham, you know, you get a big magnifying glass of an effect there. Yeah, it is very, very tough indeed. All right, Sri, we shall talk. To be continued. Coming up, OPEC supply cuts expected to be extended. In fact, it's looking like the group wants to do it before their meeting. Why is oil on the slide after 4 days of jumps? We are on the down slide right now. We'll take that issue up with Dan.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE closing bell at the...
Dan for more. So, Dan, I think it was a case of up for 4 days. I didn't say it 4 times. Up for 4 days. So, you know, that's kind of normal, right?
Yeah, that's right. So traders are now taking profits off the table, as you mentioned, Bernie. We've seen 4 days of gains, so it makes sense to take some money away here. However, we are seeing really interesting trade in Asia right now because if you have a look at the price action, it appears the bulls are still in control of this market because we are seeing crude oil prices rising higher in Asia again. So we saw that 1% fall in the US session. Now we're looking at a 0.25% gain on the NYMEX contracts. 51.42 is the level right now. And Brent just moderating down from that 58 barrel handle, 57.32 right now, up 0.16%. All of this coming with the dollar index at 93.15. So sending prices higher today, traders here in Asia. But one of the key fundamentals, the key themes that have been playing out in the market right now is this ongoing tension in the Middle East. That's been a key price catalyst in recent days. But what we're also seeing now is those headlines starting to fade and that geopolitical risk premium being taken out of the market. Traders are also putting to one side the surprise drop that we saw in US crude inventories this week, down 5.7 million barrels. Now, that was quite a significant decline. Usually we would have seen significant rises off the back of that. Perhaps we're seeing a delayed effect here today. However, traders did appear to put that to one side. As I mentioned, that data also largely overshadowed by an unexpected build in fuel stocks. So perhaps the concern is actually on the product side. So Bernie, we'll continue to monitor this for you, but for now, it's back over to you.
Okay, good stuff. Dan on energy. All right, when we return with more Squawk Box on this Friday morning, as China's Party Congress continues to take place and the shindig is happening behind largely closed doors, names starting to emerge of potential members of the Politburo and President Xi Jinping's most inner circle. We're live back in Beijing, the Chinese capital next.